Since 1985, VFIS of Texas has provided specialty insurance coverage for emergency services. We're proud to insure over 1,500 emergency service organizations throughout the state of Texas.
We understand the reason you purchase insurance is for the peace of mind knowing that we will be there when you have a claim. We take this responsibility seriously and strive to provide the best coverage at a competitive premium.
When you're with VFIS of Texas, you're part of the WinStar Insurance Group family. Our business is built on relationships, and we never want to lose focus on how fortunate we are to serve such a unique industry.
Okay, good evening. Welcome to this Monday night webcast presented by the State Association of Fire and Emergency Districts. I think we're coming to you live. It's hard to tell these days. I think I'm unmuted on this Zoom meeting. I'm your host tonight, Clay Avery, as I have been for most of these safety webcasts, coming to you live from my home. Pandemic beard still in full effect for those of you who have been watching these since March. We're still going with a socially distanced model here for our webcasts. Tonight's webcast does qualify still, though, for your 1 hour of state-required ESD commissioner training. The webcast is certified and sponsored by the V.G. Young Institute for County Government, part of the Texas A&M AgriLife Extension Service, and we're always very thankful to our friends in College Station for being such a great educational sponsor. The webcast is also sponsored by VFIS Texas, and we'll have a little video from them later on, I believe. And of course, we always thank our great partners at VFIS for being such generous sponsors. As usual, the webcast gives you the opportunity to ask questions. You can call in, text in, or email in your questions at any time during tonight's broadcast. Here's how. You can call us at 512-251-8101. Fax us your questions. It's an email fax, but whatever. 512-251-8152. You can email us. That's the safety email, safed@texas.net. And Texas is spelled out there. Or you can text us questions, 512-567-0857. Normal text messaging rates may apply there. Also, I skipped over the part where I'm supposed to tell you about getting your credit, but most of you have figured it out by now. You do have to stay with us all the way till the end of the program, and that's when we'll give you your instructions for getting that credit form filled out. ESDs are facing their first year of adopting budgets and setting tax rates under Senate Bill 2. You've probably heard something about this at this point. It was adopted just last year after the 2019 legislative session. There's a lot to talk about. I talked about getting to the end of the program and staying with us all the way till the end. Well, we're going to have to go right into it because there's a lot of information to cover. And our legislative counsel, John Carlton from the Carlton Law Firm here in Austin, is here. He is no stranger. He needs no introduction. Nor will he get any tonight because we have too much to cover. So, John, do your thing. Take it away.
All right. Thanks, Clay. I appreciate it. Hope everybody's having a good evening. We do have a lot to go through. If you saw some of my presentation at the annual conference, you'll see a little bit of that, but I do want to get into some of the more details about how you need to handle your 2020 tax calendar. You will need to work closely with local counsel, whoever your ESD attorney is, and your tax assessor and your appraisal district. But I'm going to give you some outer parameters for how you get this done. So let's get right into it. I have a lot of material to cover. Not questions, that's the end. We're going to go to the front. The 2020 tax calendar really is all about setting your property tax rates under Senate Bill 2. There's some key terminology you need to be aware of. What used to be the effective rate is now called the no new revenue tax rate. What used to be the rollback rate is now the voter approval tax rate. So there are some deadlines in this new process that are important for you to be aware of. July 25th, your appraiser is supposed to submit the certified appraisal roll or an estimate if they don't have it certified yet to your assessor. On August 1st, your assessor is supposed to provide you with the data that's necessary for you to make the tax calculations. And then August 7th is the deadline for you to get those tax calculations done and to post them on your website. Mid-August, and the legislation wasn't all that clearly drafted. I think there's a couple of mistakes, but mid-August is the deadline to adopt your tax rate. But the deadline to call your election is actually earlier than that August 24th date that you see there. We'll talk about how that comes about as we get further into the program. But and then September 30th is the same deadline to adopt your tax rate, unless you're going to exceed the voter approval tax rate, in which case the deadline bumps up into August. So as I spoke at the annual conference, I conceptually think of these, the impact on ESDs in three different categories. The first is if you've got a property tax rate of 2.5 cents or less, you're kind of a category 1 ESD. If you have a property tax rate revenues, if you have revenues of more than 6.25 million, you're category 2. Those are the big districts. And then there's everybody else, category 3. Those aren't in the statute. Those are my way of explaining the differences. So let's talk about the special taxing units, which are these small, low tax rate ESDs. So a special taxing unit has an operations and maintenance tax of 2.5 cents or less. Some of our ESDs fall in that category. I think they apply, about 20 of them in the state currently are in this category. A special taxing unit, gets to use an 8% voter approval tax rate. Now that is calculated the same way the old rollback rate had to be calculated before. And so that's 8% of an increase in the O&M rate plus your current debt rate gets you to a voter approval tax rate for these 20 ESDs with a very low property tax rate of 2.5 cents or less. And remember that calculating your O&M rate, it's all of your maintenance and operations rate from last year times that 1.08%, divided by your current value less new property. And then your debt rate is whatever your debt is that's maintained by property taxes and budgeted from debt service. That's your debt rate. Most ESDs are not going to have a debt rate. I'm going to say that again. Most ESDs are not going to have a debt rate. And so be aware of that as you go through your calculations and discuss that with your legal counsel and your financial advisors, because it has significant impacts potentially. So the slides I've got, and you should all have access to the PowerPoint already, talk about how you calculate debt rate. But remember, category 1, special taxing units, 8% voter approval rate, just like the old formula. The challenge is, for these category 1 districts, instead of a petition for an election, if you exceed your voter approval rate of 8%, it's mandatory. So there is no longer a petition process for a special taxing unit. All right, so like I said, an election is required if you've got that 2.5 cents or less. And if the election fails, your tax rate is set at the voter approval rate, which is that 8% increase. Let's talk about category 2. And these are maintenance and operations revenues, actually total revenues that exceed 6.25 million. This category applies to currently less than 15 ESDs in the state, but that impact's going to grow as revenues grow. Here's the current list of districts that I believe are impacted in what I call category 2. And the reason they're impacted is because they don't get to take advantage of a particular aspect of this new bill called the de minimis rate, because it just simply doesn't have that significant an impact on their revenues. So these category 2 districts, the big ones, they get a 3.5% increase for a voter approval tax rate. So that's a reduction from the 8% previously to 3.5% now. And so that becomes the voter approval tax rate. And that's a much lower rate than what used to be. Now, there are some things that get added in to calculate the voter approval rate. They don't really impact this year, though. So there is this thing called the unused increment rate. And I'm going to skip the M&O rate calculation slides. It's exactly the same as Category 1, but you can read that detail later if you need to. The unused increment rate doesn't apply this year. This year it's 0. But in coming years, you have the potential to add on to your voter approval rate by an amount that is equal to a rate that you haven't raised, that you didn't go up to your voter approval rate in prior years. So if you didn't take advantage of the 3.5% increase, whatever that increment was between what you adopted and the 3.5% that you could have gone up to, over 3 years, you get to add that all together, which gives you a little bit more of an increase for your voter approval rate. So, but that won't come into play really until next year and the years following. So I'm not going to spend a whole lot of time on it right now, but for now, the unused increment rate in 2020 is 0. Okay. It's intended so that, it's not punishing tax units that try to keep their rates low. So remember, Category 2, 3.5% voter approval tax rate. That's the increase that you get. Beyond that, you have to have a mandatory election if you go above 3.5%. And if the election fails, then the tax rate is set at that voter approval tax rate. So Category 3, this is everybody else. This is where the bulk of you are going to be dealing with the new tax laws. This is where your revenues are less than $6.25 million, and you're not a special taxing unit. So you are not a taxing unit with a tax rate of 2.5 cents or less. This is the other 300 ESDs in the state. So you calculate your maintenance and operations rate the same way we did in Category 1 and Category 2. We calculate the debt rate the same way we did in Category 1 and 2. You're still subject to the 3.5% voter approval rate, which seems strange, same as Category 2. However, you're only required to hold that mandatory election if you adopt a tax rate that exceeds that voter approval rate, that 3.5%, or what's called the de minimis rate. And the de minimis rate is where most everybody is going to be able to take advantage of the Senate Bill 2 changes and avoid having a mandatory election. So the de minimis rate is a rate that is equal to the sum of your no new revenue rate, so the tax rate that brings in the same amount of revenue that you had last year, plus $500,000 in revenue, plus your debt rate. And so what the de minimis rate allows you to do is raise $500,000 more dollars this year than you did last year on property. Now, that is where you get a benefit because that potential increase could far exceed 3.5%. It could exceed 8%. It could be a very, very large number. If your revenue is $6.25 million or more, 8%, the 8% of $6.25 million is $500,000. So that's why those districts are categorized in Category 2. But everybody else, you need to calculate your de minimis rate because that's going to become very important in your process. So it allows an increase in your revenues of up to $500,000. It includes new property. So if you have new development, new growth, and you get additional revenue from that, that's part of that $500,000. So you're not going to get a $500,000 increase off of existing property. It's a $500,000 increase from last year off everything. If that increase were for some reason to exceed 8%, which is quite possible, then you fall into the old rollback petition process. I know it gets kind of confusing, but your numbers you're going to have to go look at. If you exceed the 8% with the de minimis calculation, then you may be subject to a rollback petition. Not a mandatory election, but a rollback petition. I'm sure we'll have questions on that. If you adopt a rate that exceeds the de minimis rate, actually it's if you exceed the greater of the de minimis rate or the voter approval rate, which strangely enough, there is a circumstance in which that would occur. It's where you've actually lost debt service out of your tax rate, which is why I started this presentation with it's important to understand that you really don't have debt, so your debt service never goes away. But if you adopt a tax rate that exceeds the greater of your de minimis rate or your voter approval rate, then you have to have an election. But you're only subject to a petition if you adopt a tax rate that is less than your de minimis rate, but greater than your voter approval rate. Okay, so all those calculations, once again, your election is required if it exceeds the greater of the voter approval tax rate or the de minimis tax rate. If the election fails, then your tax rate is set at the voter approval tax rate. All right, I want you to hear that again. If you go above, if your de minimis rate exceeds your voter approval rate or the de minimis, the greater the voter approval rate or the de minimis rate, and your election fails, you go back to your voter approval rate. You do not go back to the de minimis rate. So you take a risk if you adopt a tax rate that exceeds your de minimis rate and your voters tell you no because you're going down below the de minimis rate. Okay?
Hey, John, let me just jump in here. Can you hear me?
Yes, I can.
There is a scenario where you could have the voter approval rate being greater than the de minimis rate, but that's usually only for the big guys, your category 2 folks, right?
That scenario occurs when you've lost debt service off of your tax calculations in a given year.
Okay.
It actually can occur then too, but the de minimis rate for the really big guys will always be lower than the voter approval rate.
Because so, it doesn't it takes them very little to get that $500,000. So it's basically
correct.
Not, but that $500,000 rate is not much help to those guys who are bringing in $6 million plus a year. Okay. I just wanted to make that clear in case somebody said, well, isn't the de minimis always going to be bigger? Well, for the smaller ESDs, mostly you're going to see your de minimis rate being quite a bit bigger than the voter approval rate. But for our bigger, our higher revenue ESDs, they might see a very low de minimis rate because of the amount it takes to get $500,000. That's
correct. Correct.
I'm going back.
Their de minimis rate may be less than their voter approval rate.
Got it.
So in all scenarios, if you have to go to an election, your ballot language has to read this particular way with the blank. You can't vary from this. This is what will appear on the ballot. As you read through that, it's not real favorable for getting an election passed because it talks about approving an ad valorem rate for the current year that is a certain amount of dollars higher than the voter approval rate. And last year the rate was something else. So it's definitive language. Now I want to talk about that election a little bit because there is a side restriction on the use of public funds, and ESDs may not knowingly spend or authorize the spending of public funds for political advertising. Okay? So you can't spend money on a tax rate election that doesn't factually describe the purpose of the measure or that advocates for the passage or defeat of the measure. Okay, so you can't advocate one way or the other on a tax rate election. That is bad stuff. Texas Ethics Commission oversees all of that. So remember, and the limitation is particularly for a communication, we're describing a measure, which a tax rate election would be a measure, where the officer or the employee knows it's false, and that information is sufficiently substantial and important that it would be reasonably likely to influence a voter to vote for or against the measure. Okay, so we can't try to influence voters to encourage an outcome on our election, and an offense to that is a Class A misdemeanor, and the Texas Ethics Commission does pursue those violations.
Hey, John.
Now, yes.
Does that extend to the service provider as well, or does it depend?
It can depend. The service providers in most instances are not-for-profit corporations, and they may have restrictions on political advertising themselves. So they need to consult with counsel before they spend any money on political advertising.
Got it.
So there is an exception for disaster relief. And it's an interesting little exception, and there's been some debate in the press about it, but it's been relatively quiet over the last 4 to 6 weeks. If the governor has declared any part of the area in which the taxing unit is located as a disaster area, which is currently the case for the entire state of Texas, then the ESD can direct that its voter approval rate be calculated as though it's a special taxing unit. Remember, that's the 8% on the voter approval rate. But the 8% doesn't get to take advantage of the de minimis rate, and it doesn't get to take advantage of the unused increment rate, and it is a mandatory election if you exceed 8%, if you calculate the voter approval rate as though it's a special taxing unit. So you can go that route and calculate. If you choose to do that, you are in that for 2 years at least, and possibly 3. So you need to project those calculations and anticipate what might happen if you choose this. The mandatory tax rate election is not required if you are adopting a tax rate for the year following the year in which the disaster occurs, if you have increased expenditures necessary to respond to a disaster. Not including a drought. Disaster is pretty broadly defined throughout the statutes, and the legislature could have defined disaster to exclude pandemics, but there are places within the statutes where disaster includes all of that. And the only carve out in Senate Bill 2 was a disaster not including a drought. So droughts are excluded because I think the state's in a drought most of the time. And so if you have increased expenditures as a result of the pandemic, you may be able to avoid the requirement for a mandatory tax rate election. Now, the governor is evaluating his continuing disaster declaration on a monthly basis. There is no case law or opinions about if he only had a disaster declared for part of the year instead of all of the year, or didn't have a disaster declared at the time you set your tax rate. None of that has been worked out. So you need to consult with your counsel about whether you can take advantage of the disaster relief exception. All right, so let's talk a little bit. Those are calculations, and all of that, remember, under Senate Bill 2, your tax assessor gives you the underlying data, you do the calculations. Some of the tax assessors will be making those calculations for you, but they are not responsible for those calculations. And so my advice to you is you need to run them yourselves. Do not trust your tax assessor to calculate the numbers without checking what they're doing, okay? They are not obligated under the statute to make those calculations. They are obligated to give you the underlying data so that you can make the calculation. Now, let's talk about transparency in Senate Bill 2, because this is a big topic about political subdivisions and what information they were putting out there. We'll talk about the fact that an internet website is required now, and that hearings and notice procedures are revised. They are somewhat simpler under Senate Bill 2, but you do have to have a website. So there is no published notice of your no new revenue tax rate or your voter approval rate. That's all out the window. There is a posted notice on your website of that information, but there's no published notice for that. There is notice required for all, and I emphasize all meetings where you discuss adoption of a tax rate. This would even include where you discuss a proposed tax rate. It doesn't mean the meeting where you adopt the tax rate. It means meetings where you discuss adoption of a tax rate. So if you're going to talk about your tax rate, you need to have posted a notice of that meeting. Now, the simplification of all of this is that there is only one hearing required where you listen to people talk about what they think about your tax rate. And that has to be at least 5 days after notice if and only if the tax rate is going to exceed the no new revenue tax rate. Now, that's very similar to the prior notices. However, it is only one notice, and it's only 5 days before, rather than 2 notices and 2 public hearings. It's 1 meeting, 1 notice. The board may vote on the tax rate at that 1 hearing. All right, so you can do it all at once. If you decide not to adopt your tax rate at that hearing, you have to do so within 7 days. All right, and you are required to post the notice of that hearing on the website if you publish the notice in the paper instead of mailing it. If you mail your notice to all of your taxpayers, excuse me, then you don't have to post it on your website, but most people aren't going to do that. All right, so there is still a simplified tax rate notice, and this might apply to Category 1, those 2.5 cent or less ESDs, and it might apply to some of our Category 3 ESDs. Remember, in the past, simplified tax rate notice was for an entity that had a tax rate of less than 50 cents and imposes taxes less than $500,000 for the year. And in that case, the simplified notice allows you, excuse me, let me go to that slide, allows you to only post 1 notice at the end, assuming you do not exceed your voter approval rate. Okay. Now, you are required, as I said before, to have an internet website. Effective January 1st, 2020, every ESD in the state was required to have and maintain an internet website or access to a generally accessible internet website. That means somebody else's service is serving as your website, whether it's Facebook or something like that, as opposed to you hosting all the stuff for your website. This applies to every ESD in the state. There are no exceptions. There are no exemptions. There are no changes for size. Everybody has to have a website effective January 1. That website has to have a whole bunch of information on it. It needs to have the name of all the commissioners, contact information, budget information, proposed budget, property taxes, debt tax rate, and your most recent financial audit. All of that information needs to be on the website. In addition, under another bill, you're required to have the date of your election, the date of each elected officer, which doesn't apply to all of our ESDs, but applies to some, and the notice of each meeting, i.e. the agendas, from September 1 going forward, and the minutes of each meeting from September 1 going forward. So all of this information needs to be up on a public website, publicly accessible website at this point in time. All right. So what everybody's been waiting for is the calendar. I'm moving fast. So January 1, 2020, a date in the past already. You were required to post all that required information on your website. Let's move to where we're at now, and you're actually a little behind if you haven't already started. April through June, you should be getting preliminary tax values from your appraisal district and your tax assessor. Now, that information is going to be somewhat limited. You won't be able to actually do the full calculations of the voter approval rate, the de minimis rate, the no new tax, the no new revenue rate, or any of your other various iterations of the calculations, but it will give you an idea of where your tax rate might be in order to generate a certain amount of revenue. So you need to push to get that information from your tax assessor and your appraisal district. May through July. So starting last month through the end of this next month, you need to be in budget planning meeting. So you need to be talking about and planning your budget and understanding what your revenue needs are. I want you to remember to not talk about your tax rate unless you're willing to post and publish a notice of that meeting about your tax rate. This is all budget meetings. And remember that all of your board meetings have to be posted in compliance with the Open Meetings Act As long as you're not talking about the tax rate you're going to adopt, you don't have to go through the extra publication of notice or mailing of notice of those meetings. That needs to occur through July. By late July and into the first week of August, you need to be talking about your proposed budget, and you should be getting information based on those preliminary values from the tax assessor and the appraisal district to begin evaluating what your rates might be. You need to then, by early August, August 7th, you have to post the tax rate notice on your website. And that notice, the state's actually got the form for that notice now. And so they have to post that tax rate notice on their website. Now make a note, this deadline and the deadline to post that tax rate notice does not apply to an ESD that can use the simplified tax rate notice. And remember, the simplified tax rate notice applies to districts with less than $500,000 in revenue. Those districts still have to have a website. They just don't have to post this particular notice because they have a simplified notice process. Now, here's where it gets interesting. August 17th, 2020 is the deadline in 2020 to call an election for a tax rate that exceeds the greater of the voter approval rate or the de minimis rate. This applies to all ESDs, regardless of revenue and tax rate. So even if you're a small ESD and you have a simplified tax notice process, if you're going to adopt a tax rate that exceeds the voter approval rate or the de minimis rate, the greater of those numbers, then you have to do so by August 17th because that's when you have to call the election. Now, if you're a very small ESD, the likelihood of your tax rate exceeding the de minimis rate is not very high at all. In fact, it probably won't occur. But you need to be aware that August 17th is a hard date for calling an election. Now, under the statute, it also talks about August 24th being a deadline to conduct your public hearings and adopt your tax rate that exceeds the voter approval rate or the de minimis rate. I know the cities are considering that to not really be a realistic deadline. They are interpreting everything to mean you need to have all of your public hearing and your adoption of your tax rate done by August 17th. I don't think that's an accurate read on the statute. I do think this is a mistake in the statute. I think the draftsman missed these differences in the dates. But I do think it is possible to call your election by the 17th and conduct your public hearing after that, before the 24th. And so this applies to all ESDs, regardless of revenue and tax rate. If you've got a tax rate that's proposed that exceeds the greater of the voter approval rate or the de minimis rate, this is your deadline to conduct your public hearing and adopt the tax rate. The notice of that hearing has to be published in the paper and posted on the website 5 days before. There's a simplified notice requirement for those small taxing units, less than $500,000 in revenue. But in general, you've got to have this notice published. Now, there's a whole lot that occurs between August 24th and the end, but September 30th is your deadline to hold your public hearing and adopt a tax rate that doesn't exceed the voter approval rate, but exceeds the no new revenue rate. So this is the situation where you've got a tax rate that raises more revenue this year off of the same property you had last year. You still have to hold a public hearing. You still have to provide notice of that, but you only have to hold one hearing, and you can adopt your tax rate the same day you hold that hearing. But all of that must be completed by September 30th. Most of your tax assessors are going to want that done by mid-September so they can get their tax bills out. But this is the statutory deadline. Remember, like I said before, if you don't adopt the tax rate at your public hearing on the same day, then you have to adopt it within 7 days at a public meeting that's been announced at the public hearing. Otherwise, you've got to republish notice and start that process all over again to hold your public hearing and adopt your tax rate. So finally, September 30th is also the deadline to hold a public meeting. And I distinguish between public hearing and public meeting because if you have a public hearing, you're required to listen to everybody about your tax rate. If you have a public meeting, you can just have a meeting to adopt a tax rate that does not exceed the no new revenue rate. So this is the rate that generates the same revenue off the same property year over year. So the notice of that hearing and meeting has to be published in the paper and posted on the website, but it's a simpler process. And there is a simplified notice for the small taxing units. September 30th is also the deadline to submit your adopted tax rate to the tax assessor if it does not exceed the voter approval rate, but it exceeds the no new revenue rate. And even if it doesn't exceed the no new revenue rate, you have to submit it to the tax assessor by September 30th. Remember these deadlines, your tax assessor collector wants this information earlier in September, probably mid-September if possible. So then finally, November 3rd, 2020 is election day. The reason I made a point of saying August 17th of 2020 and August 24th of 2020 is because election day, year over year, changes from year to year. So the deadlines are driven off of when this uniform election day is every November. The deadline for calling the election is 78 days before election day. That's August 17th. That's the date you would have to have an election, a mandatory election, if your adopted tax rate exceeds the voter approval rate or the de minimis rate. If you're in the circumstance where you have adopted a tax rate that exceeds the de minimis, the voter approval rate, or the voter approval rate calculated as if you're a special taxing unit, so an 8% increase, but it doesn't exceed your de minimis rate. Now remember, you're subject to a petition, just like you used to be. So the petition has to be filed within 90 days after the day you adopt that tax rate. So there's a deadline there that I can't put a date on because it depends entirely on when you adopt your tax rate, and it only applies if your tax rate that you adopt exceeds the voter approval rate calculated in either way, but does not exceed the de minimis rate. So in that circumstance, you may be subject to a rollback petition. All right, Clay, so I have swung through 54 slides in 40 minutes because I know there will be questions. Hopefully there are questions.
We have some. First off, I don't know if there's anything you can do about it, but your mic is getting possibly covered up at different spots. I don't know.
Oh. Sorry about that.
So, yeah, just be conscious of that because we're getting a little muffled every now and then. We've got a couple of issues in the chat. Okay, well, let's go out to Henderson County. Is the state going to provide a form or format for submitting their new tax calculations, rates, and information? If so, when? So are they going to get some sort of form to understand how to do this?
So the Comptroller's Office is the agency that's been responsible for helping with truth in taxation. They do have forms up and available for folks to use for calculations. The interesting thing that I've found is it's always it's interesting to see which counties use which software for their tax data and how that plugs into the state's form. But the state should have forms to help you with those calculations. I know they are working on that and have finished some of those forms already, including the very rudimentary notice and that kind of stuff. So,
it seems to me, kind of going off of that question, a lot depends on the no new revenue rate. And if I heard you correctly in the presentation, that's going to be something that we or ESDs are going to have to figure out, or at least the county isn't responsible for giving you that number.
The tax assessor is not responsible for giving you that number. Many of them will, but under the statute, the entity is responsible for calculating the no new revenue rate and the voter approval rate and the de minimis rate and the unused increment rates. and the special taxing unit rate, all those rates.
Okay, so when you're using property values, can you go back to those slides that
Sure.
that talk about those calculations? Because basically, when you have that equation up there, I'm trying to figure out if that one. No, because then you get to the no new revenue rate. So back one more, maybe.
So, yeah, because I'm going to go all the way back up to the, let me go back up to here.
Right.
Let's see. So here's your no new revenue rate calculation.
Okay, so when you're talking about current value and new property value, is that taxable or market value?
So those are the taxable values, I believe.
Okay, and when you're using last year,
those would be referred to as the assessed values, right? So
Assessed
it's what you can assess taxes upon.
right? So that makes sense. And last year's levy, is that going to be the M&O levy, just the levy from
Yes.
your
Well,
M&O rate?
So it's interesting. The no new revenue rate is just last year's levy, not M&O. Okay. There is also this concept of the no new revenue maintenance and operations rate. Okay. We use those two things differently for calculations under the statute. So the no new revenue rate is last year's levy less your lost property levy divided by your current total value less new property value. But that includes debt, that's everything. That's all of it mixed in together. The voter approval rate, when you calculate the voter approval rate, though, you take the no new revenue maintenance and operations rate, which is just your maintenance and operations revenue, not your total revenue, times that increase. And for the special taxing units, it's 1.08, and for everybody else, it's 1.035.
Right.
So they give you that increase. Your voter approval rate is an increase in your maintenance and operations revenue, whereas the no new revenue rate is just a revenue stays flat.
Okay.
Based on the same property.
Okay. Then, because this is only going to, and for those of you out there, this is really going to come into play. The difference between no new revenue rate and no new revenue maintenance operations rate is really going to come into play if you've been levying a big debt rate, right? So for some of our ESDs out there that have been levying debt, have been levying a debt rate, that may come into play there. I need to look at that a little bit more.
Yes. So let me make myself very clear on this. I know of practically no ESDs that have what I would consider a debt rate. There are ESDs that have reported themselves as having debt and for which their tax assessors have calculated them as having a debt rate. But that debt is all funded straight out of their budget. There's no mandatory obligation to set aside and have a debt rate. And so there are some loans that talk about that now, but for the most part, if you're an ESD, you're not going to have a debt rate. You need to talk with your counsel about this very thing and be very, very clear and intentional. Don't let the tax assessor tell you how to handle your finances and whether something is debt or not. You need to make that choice yourself.
So let me ask you this question. If somebody has been on their reporting a M&O rate and an INS, aka debt rate, they don't have to necessarily stick to that in this calculation unless that INS rate was actually for like something like bonds or something that would be classified.
Something that required you to pledge debt taxes for it.
Okay. So again,
now the problem is the problem in this current calculation set is that as soon as you eliminate debt rate that you've historically used, you are going to have a real hard time maintaining your property tax rate unless the de minimis covers more revenue than you could possibly want to increase from year over year. The de minimis really is the key in all of these calculations.
Right. Let's see. So we only need to post one notice in paper and can hold our public hearing and the vote at the same meeting. Is that true? That's true.
Yes. Yes. One of the nice things out of Senate Bill 2 was that lengthy process of notice, public hearing 3 days later, meeting a week later, that's out the window. Everything is consolidated into one. I will say that is because they compressed the time schedule so much to require you to call an election that there was not time for them to require multiple public hearings and notices and a vote on it and a vote by the board on a tax rate before the deadline to call an election. So the only reason they eliminated all of those other requirements was to be able to force you into having time to call your election by the 78th day before election day.
Okay. Also, does the notice need to change from previous years as long as we don't exceed the required rates?
The notices are completely different. Do not throw out last year's notices. Do not use last year's notices at all.
Okay.
Throw them out. Throw them away. Do not use them. There are new forms, entirely new forms for 2020.
What if we are under a 2% tax rate?
Then if you're under 2 cents or 2.5 cents, you're a small taxing unit. You're subject to the small taxing unit limitations, which is an 8% voter approval rate calculation. And if you exceed the 8% voter approval rate, then you have a mandatory election. You're subject to all the new notice forms. You have to go through all the same process. Now, if your revenue is less than $500,000, now you're in the simplified notice category, but you're still required to have a mandatory election if you exceed the voter approval rate. And you still have to order that election by August the 17th. And you still have to publish your simplified notice in time to order your election on August 17th.
And but for simplification purposes, it's very much like it was. If you're one of those smaller taxing entities, lower tax rates, it's very much like it was, except that 8% is just a hard cap now.
The 8% is a hard cap. If you do not exceed the 8%, then it very much is a simplified process from prior years. If you exceed the 8%, then you must adopt your tax rate and call your election before August 17th. Because as a special taxing unit that gets to take advantage of the 8%, you do not do the de minimis calculation. You do not get the $500,000 increase. You do not get the unused increment increase. You are 8%, and that's it.
Okay.
And please, everybody hear me, all new forms. Throw away anything you had last year. It is not appropriate. It does not comply.
Right, and we're getting some folks in the chat, which is below your screen, that are saying that the legal notices appear to be on the comptroller's website. The comptroller has been instructed to give a lot of these new notices.
Those revised notices came up last week.
Right, so they came out last week. So check out the comptroller's website, and we'll try to post those on safety as well on our website.
What I'm not sure of is whether the comptroller has released their spreadsheets for calculation of the rates. I believe that they have, but I'm not sure if they're readily accessible on their website.
What is adopted first, the budget or the tax rate?
Budget is always adopted first.
Okay.
Budget must be adopted before the tax rate is set.
if you have a contract with the county tax collector to do all of your calculations, et cetera, is it okay to use their numbers?
If you're contracting with them for that service to be your person calculating, yes. Not everyone's got a contract with their tax assessor that actually takes that into account.
From Bear County, if you stay under the no new revenue rate for 3 years, can you go up to 10.5% based on not using previous year's increases? I'm going to take a stab at that and say no, right? Constitutional limit is 10 cents.
So 10 cents is the max any ESD can go to, but you could potentially go up, and we'd have to do the math, and I'm not going to do it on the fly. I suspect Josh has done the math. But if you save that 3.5% increase every year for 3 years, then eventually you might be able to take a 10.5% increase, which is 3.5 plus 3.5 plus 3.5, in that third year.
Okay, I thought he was saying,
but you can never exceed 10 cents.
right. I thought he was saying, can I go up to 10.5 cents? He's saying go up 10.5%.
Right. Yeah. And I think it's really important as we talk about all of this. Some folks talk about their tax rate in terms of a percentage. It's actually not a percentage. It is a certain dollar amount per $100 of assessed valuation. And so you can refer to it as a percentage, but your tax rate is a dollar figure. The increases we're talking about are percentages of increases.
Okay. Once again, careful on the mic because I think you're.
Sorry, I'm trying to keep you there.
What if we don't have an ESD website? Can we use our volunteer fire department website?
The requirement is that you have access to a publicly accessible website. So as long as you have access to that, then you can put your information up there, but the public needs to be able to find it. You could be a page within your volunteer fire department's website, but they need to be able to see that, and all that information needs to be there.
Okay, if we are at 0.0625, so 6.25 cents per $100 of valuation, we fall into category 3, correct? Not necessarily. It depends on your revenue, right?
Correct. Depends on your revenue. Has nothing to do with your tax rate. Depends on your revenue.
I can't do the math really quick, but if you're at $10 billion in terms of assessed value or something like that.
Yeah, and remember, those categories are simply my way of explaining when the de minimis rate becomes something you need to pay attention to. If your revenue is less than $6.25 million, then the de minimis rate will have a benefit to you in some way.
Okay, if the tax rate is 10 cents and the revenue is 125,000 and no increase this year, are we in jeopardy of any of the limits? You're probably going to be covered by the de minimis, right? If
you have a district that is low tax rate and revenues are less than 500,000, they are either going to be able to calculate, and I assume they're going to adopt something at the no new revenue rate or lower. Then they will be able to use the simplified notice and adopt their tax rate at one meeting, one hearing, one meeting. Right. If they exceed their no new revenue rate, different set of calculations. But what I understood the question to be was, we don't exceed our no new revenue rate.
Well, they're saying they're a 10-cent district, and they're only getting 125,000 off of that, off of the 10
Correct.
cents. So they're pretty
Correct.
Low revenue district. The catch is, what is your no new revenue rate? If your value skyrocketed in your district, you could be at least needing to take advantage of the de minimis, but it's unlikely that you're going to get.
You're unlikely going to have a mandatory election. Now, here's another thing to be very clear with everybody, because I think there's confusion about this within the community. Adopting the same tax rate year over year is not raising your taxes. Okay? That is not raising your tax rate. But the same tax rate year over year, if property values increase, is an increase in tax revenue. And what the bill and the law is concerned about is increases in tax revenue, not increases in tax rates necessarily. So just because you adopt the same tax rate this year as you adopted last year does not mean that you're clean to go without having to have hearings or notices or these other requirements for rates that exceed the no new revenue rate.
Right. I mean, we have districts, especially our higher property value districts and higher growth districts, that will see every year their no new revenue rate, what we used to call the effective rate, going down because their values are going up to the point where they can't even tax at the same level they were taxing last year because it exceeds their voter, what we now call voter approval rate. So it's still possible.
Correct.
You're not okay. You've got to know what these rates are. You can't just tax at 10 cents because you've always taxed at 10 cents and you think that'll be okay.
Correct.
I mean, you might be, but you're going to have to make sure how much money does 10 cents got you last year. How much money is that this year on these values?
I will say, everybody, listening to this presentation, you need to know where your tax rate is going to be before August 12th. Because you have to make a decision on August 17th as to whether or not you're going to call an election. And so you need to know all these calculations. You need to know whether the de minimis rate gives you room to go above the voter approval rate. You need to know all of those calculations. And you need to understand where your budget's going to be by August 12th. So that you have time if you had to call an election.
If you plan to keep your tax rate the same as last year, what is the impact of SB2? Well, it depends on what your tax values are.
Tax rate means nothing. It's the tax revenues. If your revenues go up, then you have to go in and figure out all these calculations.
So this Hays County ESD will be over the de minimis rate, but half or more will be new property. Last year's property increases should be lower than 8% disaster numbers. Can you skip the do they not have to worry about the de minimis?
In that situation, if new property growth generates more than a $500,000 increase, then your voter approval rate is going to be higher than your de minimis rate. And you're just going to probably need to look at the calculations for the voter approval rate.
Okay. Can you review the disaster declaration use? I know I wrote down some stuff. This is not settled, right? We don't have understanding of when the disaster has to actually be, or how long it has to actually be.
The statute, the language of the law is pretty clear that what has happened this year is a disaster as defined in the statute. What's not clear is whether the timing of that has to be when you are setting your tax rate, or just sometime during the year prior to you setting the tax rate. I think there's a good argument that it's just sometime during the year, but I have not seen the Attorney General weigh in on that opinion yet, and I wouldn't be surprised if something didn't come out regarding that. The other thing I would say is that if the legislature or the legislators really want you to not consider a pandemic a disaster, they will go into the legislative session next time and make a change and impact this. So I don't know what the answer is going to be, and the law has not been tested on it yet.
Okay. Can John expand on no discussion of tax rate during budget discussions? Okay, so when you're talking about your budget, it says you can't talk about the tax rate unless you've posted that you're going to talk about the tax rate at your meeting.
Correct. You have to have actually done a notice publication for meetings where you're going to discuss your tax rate. And so I'm trying to get to that. So those requirements are out there. So my recommendation is that you really talk about your budget and what you need and what your projected revenues might be, but not what you're going to propose your tax rate to be until you have all those calculations in hand in late July and early August.
Right. So don't talk about
so
what
you
the
can
actual.
post.
Go ahead.
Yeah, I mean, you know what your possible tax rates might be, but don't talk about what you're going to propose as a tax rate. Talk about your budget, what your expenditures are, and what your revenue needs are. You can talk about what tax rates might generate what revenue, but not. You don't need to be talking about what you're going to propose as a tax rate.
Yeah. Are we frozen? I don't know. We're getting. We've got a lot of fact-specific questions coming in, and we're going to have to.
So yeah, let me deal with the fact-specific questions, because there is no way that I can answer all of the fact-specific questions for a particular district in this presentation. We spend a couple hours with each of our clients working on that, because they are very fact-specific to each district and each district's calculations. And so what you need to know coming out of this is that you need to utilize your resources to help you with calculations and with your calendar. All the calculations, there are spreadsheets and tables and formulas, and the comptroller has some of that information. Your tax assessor has some of that information, and you need to get help to do that. But you need to be moving on that quickly. You cannot wait and assume that you're not going to have to, take action to hold a hearing or conduct a meeting or call an election. Because if you miss the August 17th date, then you are not going to be able to raise your tax rate beyond the voter approval rate or the de minimis rate, whichever is greater for most districts, or beyond the voter approval rate if you're a special taxing unit.
Okay. Are ESDs still exempt from section 26.041 so that sales taxes don't have to be considered in calculation of the no new revenue voter approval?
So the sales tax calculation in the statutes for property tax relate to a particular kind of sales tax, and that is a sales tax that is adopted by a city or a county specifically for the purpose of reducing property tax revenue. And that is not the purpose of an ESD sales tax, and has never been the purpose of an ESD sales tax. So if you have sales tax as an ESD, it impacts in no way, shape, or form your property tax calculations.
Okay. I just got word from someone out in Buchanan Dam that they're still able to watch it. So I apologize.
Oh, nice.
Austin County ESD number 3 has not had a good night and is not happy with us. I apologize for that. We will try to make it up in the future. I'm really sorry. I don't know what else to say. For those of you who are saying that this is crazy confusing and it's very hard to handle, we understand that. We didn't write the bill, so but we are here to help, and especially if you're a safety member. Vernon, I saw you out in Limestone County email in saying, can somebody help with these calculations? I can't totally do them for you, but if you want to call into safety, I'll try to talk you through it as a layman, non-legal opinion. Obviously, if you have legal counsel, that's a great place to start. We're going to have to start wrapping up here.
I'll save everybody a little brain damage for right now. I don't believe that any of you have enough information from your tax assessor, collector, or your appraisal district at this point in time to do all of these calculations. I believe you might be able to get close and estimate, but you're not going to be able to do the calculations because you won't have some of the critical data that's necessary to make them. And you won't have that information until later in July. So you can make some educated guesses, but doing the calculations and expecting them to be exactly correct is highly unlikely at this point.
Okay, so and we're here to help as best we can. reach out in any way. We need to kind of close up since we're past 7:30. If you have those specific questions, call me and I'll try to talk you through it again. I can't rely on me for a professional opinion, but I can do my best to try to help with any questions. I'm sorry for any of the audio issues or anything else that came up here, but we need to kind of wrap this up. John, if you can unshare the screen, we're going to go ahead and conclude tonight. Thank you for joining us today. Thanks again to our friends at VFIS of Texas for sponsoring this webcast. We're always thankful to them, Barbara and everyone over there, for helping us out. Our next webcast is going to be June 29th. Chief J.J. Wittig of Travis County ESD number 3, Chief Carter Johnson of Montgomery County ESD number 6. They're going to discuss TIFMAS, the Texas Interstate Fire Mutual Aid System. Learn what TIFMAS can do for your ESD. Some ESDs are very active participants in that system, and we'll be interested to hear from those chiefs about the what's going on there.
Since 1985, VFIS of Texas has provided specialty insurance coverage for emergency services. We're proud to insure over 1,500 emergency service organizations throughout the state of Texas.
We understand the reason you purchase insurance is for the peace of mind knowing that we will be there when you have a claim. We take this responsibility seriously and strive to provide the best coverage at a competitive premium.
When you're with VFIS of Texas, you're part of the WinStar Insurance Group family. Our business is built on relationships, and we never want to lose focus on how fortunate we are to serve such a unique industry.